Good day, everyone. I have some important ideas about statement of changes in equity. Enjoy and have fun!
What is SCE or Statement of Changes in Equity? Statement of Changes in Equity, often referred to as Statement of Retained Earnings in US GAAP, details the change in owner's equity over an accounting period by presenting the movement in reserves comprising the shareholders' equity. The statement of changes in equity, all changes whether increasing or decreasing to owners' interest in the company. The SCE or the Statement of Changes in Equity is prepared to meet the requirement of the readers to understand the transactions that cause the movements in equity accounts. Types of business according to ownership. First is the sole or single proprietorship, partnership, and corporation.
Single or sole proprietorship is an entity whose assets, liability, expenses, and income are centered or owned by only one person. Partnership. It is an entity whose assets, liabilities, incomes, and expenses is centered or owned by two or more owners called partners.
Corporation, an entity whose assets, liabilities, income, and expenses are centered or owned by itself, being a legally separate entity from its owners. Owners are called shareholders or stockholders of the companies.
The following are parts of the statement of changes in equity. First, heading. It consists name of the company, name of the statement, date of preparation. Elements that increases the equity. Net income for the year and additional investment. Elements that decreases to equity. Net loss for the year and withdrawals by the owner. Initial investment is the very first investment of the owner to the company. Additional investment causes the increase to owner's equity by adding investments by the owner. Withdrawals causes the decrease to owner's equity by withdrawing assets by the owner.
These are the examples of statement of changes in equity. In single or sole proprietorship, we use the statement of changes in owner's equity. And in partnership, we use the statement of changes in partner's equity.
Purpose and importance of statement of changes in equity. Statement of changes in equity helps users of financial statement to identify the factors that cause a change in the owner's equity over the accounting periods.
Areas, movement in shareholder reserves can be observed from the balance sheet. Statement of changes in equity discloses significant information about equity reserves that is not presented separately elsewhere in the financial statement, which may be useful in understanding the nature of change in equity reserves.
Examples of such information include share capital issue and redemption during the period, the effects of changes in accounting policies and correction of prior period errors, gains and losses recognized outside income statement, dividends declared and bonus shares issued during the period.